Hi, I'm David, and I'm here to talk to you about cryptocurrency price analysis for Thursday, June 20th, 2019. Today we're going to be talking about Bitcoin again, looking at two possible scenarios for what's going to happen next. Are we going to get above 10,000? And if so, what's it going to take to get us up to 20? Or are we going to get stuck below 10,000? And what does that really look like? So, without further ado, don't forget that like and subscribe below. Let's get right into it. All right, let's start off with Bitcoin here on the 4-hour. As we usually do, we're going to start more like right now and then zoom out to look at the two possibilities of whether we might go above 10K, where we're going to go after that, or if we don't go above 10K soon, where that's going to lead us. So for starters, let's just look at what's happening right now. We just recently kind of tested on about 9,300, and we have basically in my previous Bitcoin video about 2 weeks ago, I was talking about how we had been in an ascending channel. That's this one. Talked about how we looked like we were getting into a descending channel, but what appears to have happened is this 200 moving average, sure enough, carried us kind of across and back up into the previous ascending channel, it seems. But now we're forming a wedge here, and it's going to have to make a decision pretty soon. It looks like we might be getting rejected off the top of that wedge. We previously topped out at just under 9,500 on the top part of this wedge. So to see why 9,500 stopped us out, I think we're going to want to go to a daily time frame, and we're going to want to invoke our good friend, the Fibonacci retracement tool. All right, so here we are now on the daily and with the Fibonacci retracement tool over the entire last market cycle. And you can see, why we got stopped out at about 9,500 is it's where the 38% retracement level is. But also is mainly going to tell us about what's going to happen as we go above 10,000. So for all intents and purposes, we're going to basically say if we get above 94, we're probably going to push above 10 pretty quickly. It could take longer than that, but we're going to say, let's say it does. We get above 10. Then the story is really about these Fibonacci levels. I'm not going to make an exact prediction just how quickly we're going to go up through them, but the idea is that we're going to hit on probably 11.5. Once we break 10, there's a good chance the FOMO, the excitement, will get us up to about 11.5. There's some historical resistance there. It's very reasonable that we'll bounce off of that, maybe come back down to maybe 10 is now support. And then over the next, off the cuff, maybe a year, maybe towards the next halving, we're going to climb these levels. And as we get higher, we'll see more volatility. And I really think once we break let's talk about these levels. There's the 11.5, there's 13.5, there's 16.3, and after that on to 20,000. I think once we break 16.3, it's going to go to 20 pretty fast, but I think that will take a while to get there, so don't get too excited. But that's the gist of it. We're probably going to climb up these, probably ping-ponging a little bit along the way, and then once we get above 16, it'll be a pretty quick rise to 20,000. But now let's say we don't break 10. Let's say we fall back on 10 or on 9.5. Then I think it becomes more of about this sideways channel here. Basically, last week I did say that it might be about a channel between 6 and 10. I'm going to refine that a little bit, looking at the Fibonacci levels and how well this this chart is adhering to the Fibonacci. I'm going to say probably between like 7.1 and about 9.5 is where possibly 10 itself. Again, there's psychological there, but we're probably going to look at a sideways channel where it stays around these levels for a while. And that could hold out for even the rest of the year. And that's not just me saying that based on like maybe it could. I will say I don't think it's going to go lower than about 7, barring some surprising event. But I'd say this channel will probably go on for a while, and it's, again, more than just the hypothetical that it could. But for that, I want to once again zoom out, look at a larger historical context, and look at the ascending trend line that we've talked about previously on the weekly time frame. All right, lastly, I just wanted to show you, here we are on the weekly, and we've switched to logarithmic. I've talked about this before. Basically, this trend line that Bitcoin has followed for all of its life, except when it's in an exponential run-up. And as you can see, we're kind of pulling away from it again, but we have not spent very much time on it since the last run-up and crash. Last time we spent years kind of ascending much more slowly, which is why I have a tendency to think we're maybe rising a little bit quickly. And the healthiest thing to see might be a return to this trend line. Now, that doesn't mean a crash. I mean, that's one way we could get there. But I'm more, with the sentiment in the market, I'm much more inclined to think we're going to see sideways action we can even see slightly upwards, maybe up to about 11.5, like I said, that Fibonacci level. But roughly sideways to get back to this trend line and then rise until we reach the previous all-time high. It's not a guarantee. I've talked about it before. History doesn't have to repeat itself. This is a very different market than it was a few years ago. It could rise a lot quicker, but I think a very quick rise would be much more likely to lead to a crash, and that would be unhealthy in the long run for the crypto market, for Bitcoin. So it might be what we need to see is much more of like throughout to about the end of the year is about when we retouch on this trend line. So somewhere between maybe, like I said, that channel sideways would get us there in a more healthy way than either an immediate crash or a run-up followed by a crash. Well, once again, that ought to do it for me. As I always do say, this is not investment advice. This is just my opinion. Go do your own research. Make your own decisions. Until next time, don't forget to like and subscribe. Good luck with those trades.